welcome and thanks for joining us. We've been getting a lot of questions about the One Big Beautiful Bill Act, or the reconciliation bill that was just signed into law earlier this month. Today I'm joined with Brittany and Michael, two of our professionals here at the firm, and we're going to do a webinar series specifically on the construction industry and how this bill impacts our construction clients. So Brittany, if you'll introduce yourself and get us started.
Yeah, so I'm Brittany Carman. I'm a partner here at HHM and specialize in the construction industry.
I'm Michael Vance. I am a senior accountant at HHM, and I also specialize in construction.
Awesome. Brittany, a lot of clients been calling in, questions asked. The reconciliation bill that was signed into law, what are some of the biggest takeaways, maybe some of the more popular things that you've been hearing clients say or different professionals say about this bill and how it's impacting clients in the construction space?
So I think the first question that I get is, okay, what is this? What is it impacting? When is it taking place? And so one of the things that I like to keep in mind is that some of the changes that are taken into effect with this bill are retroactive to the beginning of 2025, whereas other provisions in this bill are going to be effective for 2026 and beyond. Also specific to the construction industry, there's a lot of changes to depreciation. And so one of those is an increase to the maximum allowable 179 deduction. That's increased to $2.5 million. And then also there is a permanent extension to additional first-year bonus depreciation. So those usually impact the construction industry with purchase of equipment and things like that.
Mm-hmm. Awesome. Michael, real quick, the Qualified Opportunity Zones, the QOZs, some people may hear that acronym. There was something new introduced in this new reconciliation bill, Qualified Rural Opportunity Funds. Can you, from a high level, just explain those two things and how the new rural funds may impact some of our developers?
Yeah, definitely. Typically, a QOZ is for an economically distressed area that the governor or somebody in politics has deemed that necessary, and then you can do a QOF where you're able to put funds in that area and improve it. And typically under the QOZ, you have to substantially improve it 100%. So you can't just hold it, you got to improve it. And then you usually get a 10% step up in basis after 5 years. What the QROF does, it expands the QOZ to include rural areas, meaning population centers of 50,000 people or less. And it comes with a little better benefits. Instead of 10% step on basis, it includes a 30% step on basis. Mm-hmm. And then it cuts the 100% substantial improvement to 50%, which really incentivizes people to go out into these rural areas and invest into them to help growth and all that.
Mm-hmm. Yeah, I've noticed some clients I have conversations with, I think if they have questions, they can look at our website,
Yep.
Reach out to some of our professionals. There's certain maps that the government's put out. They've had specific questions about, I'm thinking about buying this building. Should I buy this one, or different development projects? They can reach out to us and look at some of those maps and some of the resources we have that go into a little more depth on specific areas. Brittany, with construction companies that are now beginning maybe to adjust some of their tax strategies and their operational plans in response to this bill, what do you think is more important, or what is more important for 2025 that needs to take precedent over maybe some of the changes that are going to happen next year?
So again, coming back to depreciation, looking at what are your capital expenditures, budgeting for that to see what do you need to grow your business. What new equipment do you need to purchase this year? Also, from a tax strategy perspective, looking at residential construction contracts, there's been an exception, an expansion to the exception rule for using completed contract method versus percentage of completed contract method. And that can really have a big impact on construction companies and their ability to defer revenue when they're able to utilize that completed contract method.
Okay. Awesome. Michael, kind of back to you now with some of the things when we're talking about that maybe phasing out from 25 to 26. What are some of the specific credits, maybe specifically around the green energy credits, that clients need to be aware of are no longer going to be there after this year, and that they need to, if they were going to do some things, they should do them now instead of later?
Yeah, so there's two major credits that are going to be sunsetting both on June 30, 2026, that our construction clients should definitely take advantage of. The first one's a 45L tax credit, which gives credits to single resident and multi-resident homes to incentivize energy efficient homes with HVAC, installation, water, and any sorts of energy efficiency that can help with that. The second one is the Section 179D, which relates to energy efficient commercial building properties. This allowed contractors to deduct costs equal to the amount allocated towards that energy efficient building. And both of those will be sunsetting in June 30, 2026. So our clients should definitely reach out if they are interested in getting those in before those deadlines.
Gotcha. Brittany, I know we've kind of talked about a lot, and there was a ton of changes, and we'll keep probably having multiple conversations going into more of the nuances to this bill. But what's one piece of advice or takeaway that you would give some of our construction executives as they begin navigating this change?
I would definitely say reaching out to your accountant, working with them to see what can impact you for 2025. There's also some changes with, overtime pay and deductions there. So looking at how those can impact your employees and bringing people into the company. Also, just thinking about estate planning and things like that. Again, there's a lot of things in this bill that we can't touch on here in this conversation. So reaching out to find out, what do you need to consider going forward to reduce taxes and bring cash flow back into the business.
And if you're looking for the resources page, it's on our website, HHM CPAs.com. There's a resources page. We've created a link and a portal that goes way more in depth and can hopefully spark some more ideas and information. And then you can always reach out to our firm, reach out to your CPA, and ask us more questions about how it specifically impacts your case. Thank you, Michael. Thank you, Brittany, for joining us. Thank everybody for watching, and we'll see you guys in our next webinar series.